Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin has crashed through critical support levels, currently trading around $96,000 after breaking below $98,000 for the first time since May. This breakdown triggered over $1.1 billion in derivatives liquidations in 24 hours, with roughly half coming from Bitcoin positions alone. The selling cascade intensified during US trading hours, wiping out $655 million from leveraged long positions and marking the most severe drawdown since May. The sell-off wasn't isolated to Bitcoin. Ethereum plunged over 9% to around $3,131, hitting 4-month lows. Solana dropped to $140, down more than 9% and reaching 5-month lows. XRP fell nearly 9% to $2.26 despite yesterday's historic ETF launch. The broader market cap declined 6% from $3.4 trillion to $3.2 trillion. What's driving this? Multiple factors converged. Chinese economic data showed unexpected cooling, with industrial production slowing to 4.9% year-over-year. Federal Reserve rate cut odds for December collapsed to below 50%, down from 85% just last week. And crucially, on-chain data from Glassnode reveals long-term holders have dumped 815,000 Bitcoin over the past month, the highest distribution since January. JPMorgan weighed in with updated analysis, identifying $94,000 as Bitcoin's pain threshold based on rising mining production costs. The bank argues downside is very limited from current levels, maintaining a bullish 6 to 12-month price target of $170,000. But with institutional flows turning sharply negative and spot Bitcoin ETFs bleeding $869 million on Thursday, the second-largest outflow on record, recovery faces serious headwinds. On a brighter note, Canary Capital's XRP ETF shattered expectations with a record-breaking debut. The fund recorded $58 million in first-day trading volume, the strongest ETF launch of 2025 out of over 900 total launches. This narrowly beat Bitwise's Solana staking ETF, which opened with $57 million 2 weeks ago. Bloomberg analyst Eric Balchunas initially projected just $17 million, a figure the XRP ETF surpassed within 30 minutes. Interestingly, privacy coins Zcash and Monero rallied against the broader market trend. Zcash has surged over 1,000% since August as investors shift focus toward libertarian politics narratives. Meanwhile, Tether dominance climbed to its highest level since April, signaling classic risk-off behavior as traders flee to stablecoins. Looking ahead, all eyes are on whether Bitcoin can hold the critical $95,000 level, where approximately 65% of all invested capital sits. A breach could expose the $85,000 level or even the $82,000 true market mean. But if buyers step in here and Federal Reserve data improves, we could see a sharp reversal. The next 48 hours will be crucial. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.